I was having a conversation with a prospective private elite client this week, and one of the things he asked was if what you do and your results are so good over longer periods of time, how come people aren't standing up on their cars or on the side of the street yelling, "He is the best! You go work with RC." And that's probably one of the questions I've gotten the most over the last 15 or 16 years since 1998. And what I told him is what I want to share with you, because there's something very, very specific and very important with that question he asked. And I don't think, I'm not necessarily he got the distinction I was making. And I want to make sure that you get that distinction, whether we ever work together or not. And that's what I want to talk about in this week's theme. Hey everybody, this is RC Peck with Fearless Wealth, and this week's theme is do more of what's working and less of what's not. So I'm going to kind of weave two themes into one. One with the question the guy asked me this week, and one with this do more of what's working and less of what's not. So here's the thing. This is what actually matters, and this is what actually works. How people behave is the number one determining factor in how their money grows or doesn't grow. Now, within that, it helps if they actually have a strategy, and a strategy that they are consciously, competently following. Now, everyone on this planet has some sort of strategy with their life and with their health and with their money. We're talking about money here specifically, or maybe even more specifically, we're talking about investing. But really the big picture is your financial health, your net worth. And if you want a bigger net worth, then how you behave around your money and the strategy or strategies you use every time you get a new dollar or whatever currency unit you get paid into your life, you want to have a strategy of what you do with that. That's what matters. Now here's the problem. That's not that exciting to people. What is exciting to people and what people think matters is stock picks. And I actually got in a bit of an argument with one of my neighbors. It wasn't an argument, it was more of a disagreement, or, wow, that guy's kind of weird. The other guy thinking of me. It was a couple guys who moved in next door to me. I call them kids. Anyone below the age of 30 I call kids. At least these three guys. They work at Facebook. And he asked me what I did. I said I advise people on their money. He's like, well, what's your strategy? I'm like, well, I kind of buy things that have high probability of making money. He's like, oh, like, what do you mean, like bonds this year or stocks this year? I said, well, it's real estate. I said, well, it's not really the asset class specific. It's just what has the best probability of making money. He goes, well, what do you mean, like bonds or stocks? And he didn't get that it was the strategy that determines the outcome, not the asset class. Now, I bring this up because I'm wanting people to do more of what works and less of what doesn't work. Well, what does work is how they behave and the strategies they follow. So when I get a new client, a new coaching client, one of the things we do is I have them write up a procedure of how they're going to invest. And it has to be short and to the point and very bulletproof. And then we actually implement with real money. We buy investments with real money following the strategy. We never do paper trading or paper investing or paper anything, because that's a paper waste of time. But people think this matters. Now, even worse is this is what actually sells best. Stock picks, option picks, currency picks, that's actually what sells best. Now, it may be wrapped in a strategy, but the thing is most of those strategies are not designed for humans. So when you sit back and kind of think about how your year is going, we are almost done with the first quarter. We have one more trading day on Monday left to the first quarter of 2014. Ask yourself what has been working for you and what has not been working for you. And my suggestion is you do a little bit less of what's not working and a little bit more of what is working. Now, I kind of leave you with this price chart with 4 squiggly lines. The blue squiggly line on the bottom is the S&P 500 being represented by SPY, and its return for the year, this is a year-to-date price chart, and the S&P's return year-to-date is 0.33%. Now, the red line above that is long-term U.S. government bonds. Those are up 7.5% for the year. So the stock market in the US is up 1/3%. Long-term government bonds in the US are up 7.5%. Gold, the physical metal, gold is up a little bit less, 7.3% for the year. And that's with a very huge 12% sell-off in the second half of March. But still, it's up over 7%. And then lastly, I have that yellow line on the top, and that is agricultural soft commodities. And those are up 17% for the year. So I just want to leave you with, do more of what's working and less of what's not working. You don't need to jump all the way into agriculture, soft commodities, or long-term government bonds, or gold, but start moving more into what is working and start moving away from what's not working. Small steps, and then you will get to where you want to be. But again, it's about the strategy. And remember, the point this week is to just step back and notice. Now, I'm talking specifically noticing what's working or not working with your investments. I do this by having records of the investments I make. I make an investment, I go back and look what I did that worked, what I did that didn't work. Did I follow my plan as executed or did I not? And what was I doing? Did I get scared? And it's in this reviewing that I become a better money manager, a better investor, a better coach. And that's what I'm offering to you. And hey guys, this is just another step really to help you take back control of your money and your future. Enjoy your weekend.